Good evening, all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this is for Thursday, the 20th of May, 2021. You know, when I go back and I look at some of the chart patterns, May 18th was important. The market's gotten over some of those numbers, like an arc, and that first stopped the decline, and now you're getting the markets getting a bit more interest on the long side. Same in QQQ, which is right over here on me. A number of the markets. In fact, you can see a lot of green coming back. I talked about in my futures markets updates, my wrap-up of the metals tonight and the financial markets, about not getting overly concerned about is the Fed going to taper now or not. I don't understand why people are all freaking out. I think they just need something to do because the markets had gotten high. They've given you a correction in especially commodities. They've taken out a lot of the froth, which had to be done, and now the market can base and start looking again and say what's really changed. I'll give you an example. I live in Chicago, right? We are having the second driest May ever on record. I wonder what that does for the crops all around us. That's my point. So the grains have fallen apart. They got too rich in price. But has demand really changed? No. What if we have a negative year for grains? Not that we don't produce, but not as much as the market counting on. Up and away you go. So every year you get the planting season and you got it going back and forth. Well, every year we enter summer, and that's why you heard the adage, sell May, go away. It just didn't come out of nowhere. That was the thinking. And I still say you mark that May high on your charts, but I don't think a crash of any type is coming. It's not warranted. When I take a look at ARC, the market is trying to base. That's exactly what this pattern is. Just the way it does at tops, it can do it at a bottom. And we have a pattern of a higher low and a higher high from that setup. When this market here got over those highs, that was the end of the decline. When you look at moving averages, you've got layers of resistance above you. You got the 18-day average at 110.43, then the 200-day at 114.14. So do I think it's just going to pick up and run? No. Could it? Of course it could, but I don't think that's what's in the cards. What about the Bollinger Band? You ran them on what we called that Gorilla Glue trade. That's when you just sit on it. Then you turned and you got all your signs back here when you lost the embedded reading. And I called this to your attention. This was the 18th. If you haven't taken our website at www.iraepstein.com under my education, go to it and take a look at that enhanced Bollinger Band course. It ties in stochastics in this, and this is just what it calls to do. Actually, the target on this market, when you lost it and kept it lost, becomes wherever the 18-day average is. Now, you haven't gotten there yet, but that is still the upside target off that signal. I'm wrong if the market takes out the low right there. In GameStop, this is the psychiatry trade. You've heard me talk about it. Get your psychiatrist number out. You want to trade in this, you're going to go crazy. It will break out. I don't know which way. Let it finish its basing or topping, whatever the heck it's doing right here. But trying to get your breakouts on that, you're going to lose your mind. PAVE, I mentioned the other day that now that we got to the lower Bollinger Band yesterday, that's where I expect to see professionals cover out of their shorts. And that's what I think is going on. Sure, you can go lower, but the edge isn't there. The edge was to get down to that, and that's where it ends on this leg because you're already oversold. Apple, we now have a pattern of a higher high and lower low. And again, I've pointed out that this 200-day average is a number that is very, very difficult and stay under for any length of time if a chart is going to stay bullish. And you can correct to it. You can correct to the 100. You fought a battle here in the same manner. It finally gave up. That left this other average. Now, if there's no averages left, you go into the tank, right? But you fell to this, and you've been testing it. Now we'll see what happens. I see a lot of resistance, 129.15, 128.47, and I do not see an up or a down trend. In the semiconductors, I smell a bottom in this market. I mentioned it the other day when we lost the embedded reading. You were all through here with your embedded readings, then you lose it right there. I'm looking for the 18-day average of closes. Bingo. Today. POTX. Oversold, never did get itself embedded. It's still in a downtrend. It wouldn't take very much to get over this 1330 and just start developing more sideways action. I think the market sold itself out, but that doesn't mean it's ready to pick up and go anywhere. It's not a pretty chart. In ESGU, you fell back again yesterday to the lower Bollinger Band, and like you did back here, you held. I'd look for the challenge of the 18-day average from there. This is today. Is the trend down? It is. You've got lower highs, lower lows. If you take out 95.35, and that's the key number, if you look at the low here, that was 92.45, that was the low. Then the next break low, right here, was 92.57. Take that 95.35 out, you got pattern of higher lows, higher highs, over the 18-day average, putting into play the possibility of 96.98, not wanting to get back under that low, and momentum is turned up. In XLE, higher high, lower low. I don't see a trend. I see a market that fell back to the 18-day average, and it's got all kinds of divergence. Momentum is pointing down, getting out of being overbought without a trend. When I look at the emerging market ETF, I know the world wants to be long emerging markets, and I'm suspecting this is a base, but I don't know it yet. You haven't broken out and stayed out of that. I wait until I have reasons to make an analysis for you. Is that the right wording? In GLD, I'm bullish. I think the market's going to get bought on each of these breaks until the red line closes under 79. Barring that, I look for more challenges of the upper Bollinger Band. Gold miners, not as in love with this as I am with the gold itself, but with the action that has now happened, I want you to look. Day one was right here, both numbers over 80. If I come back the day before, they weren't. The next day, over 80, and today. That is a fresh embedded signal. Take my enhanced Bollinger Band course, because now you've put this whole thing into play for that. TLT. For a market that's petrified, the Fed is going to raise interest rates, and here's what it said in their minutes, and it's tea leaf reading. Come on. The Fed's telling you in their speeches what they're looking at. Why don't people listen to what they say? They want to find words different there and make something out of it. Nonsense. The Fed will tell us what they're going to do, when they're going to taper. They need to get better employment. They need more signs that this transitory inflation is grabbing hold. PPI stays on a strong basis. Then they can back off. Do they have to do it this year? No. Can they do it late this year, early next year, begin the process? Sure. But remember, they have a huge balance sheet. All they got to do is let what matures, they go back in the market and buy with that. They don't have to buy. They can taper, put back in what they've got, and that's a lot of power to keep interest rates from running away. FXE, I'm bullish. You know, I'm looking at other countries aren't going to be doing what our Fed does. They're just coming out in Europe with their still dispersing money that they didn't do a year ago. It's crazy how they work there, but overbought. So you put it together, pretty interesting game. And I try to make that easy. Now I know you're going to say, Ira, this is a spider. What about you're showing me futures? Because I write about all the markets. I will mention the apples. I'll mention this. I'll do that in my futures letter. And in that commentary, I write as though it's Reader's Digest. I used to love reading that. I took those Evelyn Woods courses and all that to speed read, and I have a pretty good retention with that. However, I learned something. I don't want to read a 6-page newsletter full of statistics I'm never going to remember. I want to get to the line items. I want to get to the items with the summation. That's how I write. And if you appreciate that, I'm going to lead you down the roads as to where that is. And that's how I talk here. I think you'll see. It's no nonsense, right to the point. Yeah, it's my opinion, but heck, it's my show. So you put it all together, you try to figure out what to do, and I want to show you this for free. And if you haven't become a subscriber to any of my products, no credit card. We'll give you the Spider ETF, the futures morning videos. We'll give you the written commentary, special reports. You get it all. Simply call us or go to our website. If you go to the website, all you need to do there is sign up for the free trial. I'm Ira. I'll see you tomorrow.